Hello, this is Dave, and welcome to Equity Story. I'm with Mr. Wolf and General Share Advice, and obviously not personal advice. Wolfie, again, a number of announcements come out today. So, can I start with the ones
Dave, before you go on, let's make it a little bit shorter than yesterday, because I think I looked at the clock. It was like half an hour. Probably people fell asleep at the end of it. So.
Yeah, they did. So we'll go quickly now. The stories I like, MRM on the charts, looks very, very good. Look at that chart. It looks like it could go higher.
Yep.
Are the fundamentals good enough to take this higher?
Yeah, great. Look, much better results. So the bottom line really, about 4,000% or something ridiculous, right? So from really nothing to decent profit. Can they keep going? Possibly. The markets out there at the moment is positive for them to do well. They guided for growth. So yes.
Again, IEL as well. So I know you haven't liked the stock. You've always thought it's expensive. The price action is excellent. Is it expensive now after that announcement?
Yeah, can I just clarify? I like the story. I'd never liked the actual valuation, right? So that's my biggest issue here. However, they've come up with over 100% growth, right? So that chopped at 150 times PE down to 70, to my calculations. They probably need to do another one of those 50 to 100% type reports in FY23, and then it's looking pretty exciting.
But isn't that growth just everyone coming back from the COVID? Is that a one-off growth?
Maybe. Well, look, I don't know if it's a one-off growth. I think they've been growing pretty strongly previously, but it's always been like ridiculously overpriced for me, and the growth wasn't at 100%. So there's probably some. What you're saying is probably some truth in that. The growth really picked up because of the post-COVID type stuff. So there's a lot of pent-up demand that's obviously happened there. So yep, 100%. You're absolutely on the money there, Dave. Yeah. So the problem I've got is they didn't give any guidance, and I haven't seen anything. And I went through pretty much all their presentations and everything else out there, unless maybe they've still got something to come up with. Let's just pretend they're going to grow for another 50% next year. If that's the case, I think there's a trade in here, quite comfortable trade, maybe taking it into the 30 somewhere.
Okay, and what about even at 30% growth? Would that?
Yeah, well, look, from 70 to 30% growth, let's be conservative, like you said. Let's say 30% growth. That will chop it down to about 50 times, right? Which is now a little bit more attractive. I know it's a market darling, so a little bit more attractive. And you know what? At 50 times on 30% growth, that's decent, because that's still under 2 on a PEG ratio, which is okay.
And this company has always run on that sort of multiple, hasn't it?
Yeah, exactly. So look, let's say 30% growth, and maybe I'm interested in this.
All right, interesting, Wolf. So, these are tough times. I think the question is, I think all these stocks at the moment, we need to see. I think I'll see where they are on Monday next week. Yeah.
Yeah, absolutely.
Because I mean, they are going to go up and down heavily with Jackson Hole.
100%. I mean, the good thing with this, it is profitable. That's why the market's sort of really taking a shine to it, and it is a market darling.
Let's talk about EGL.
Yes.
Very quickly. So it's actually above trend. It's been a fantastic trending stock. It's done very, very well. Gone through buy signals, bullish signals. Just a great looking chart all in all. It's come down with the markets. Today's announcement good enough to get going again, Wolf?
Look, today's announcement, or at least the story itself, is good enough for a long term out there that has some patience. The fact is that they've got business units that are focusing on the renewables, right, and supporting renewables, and they've also got environmental type stuff as well with a water segment or sector that they're getting rid of the PFASs, which is the forever type chemicals, that are found in the water. So there's a lot to like about this over the long term, and they are guiding for growth next year. It was actually quite a good, decent result today. They're guiding growth for next year. So it's one of those stories that you really just have to buy and just be patient with it, I think.
Wolf, AKE, it's right up against resistance. It actually hasn't really sort of gone on with it. It is slightly up. The hard one, this one. I think fundamentally I worry about the Argentina at the moment. So fundamentally to sell. Technically, there is resistance at 14 at the previous highs. Is the announcement strong enough to go for it to break through that, Wolf?
I tell you what, fundamentally, I prefer PLS. This is good results, but expecting good results with ridiculous lithium prices, right? So I think I'm tempted to go with you there. I think the Argentina or just outside of Australia risk is quite high for me, and I'm a profit taker on this.
Okay, I think I'll join you on that one. Now, Flight Centre is travel. There's a lot more travel happening. Is it showing in the numbers?
Massive improvement, but still huge loss making for Flight Centre. I love the fact, right? I love some of the excuses that the companies use for the losses. Now they're calling that travel is an essential. They say that people, doesn't matter if inflation, war, climate.
Well, it's essential.
World's collapsing. People will buy tickets. Doesn't matter if they have to pay.
Well, I'll tell you where travel's essential. If you're living in Ukraine, right? You need to get out of Dodge, right? Or maybe
I love it. That just now it's not a discretionary spend. It's an essential spend. People are just going to do it anyway.
Yeah. Okay. Right. Okay. Well done, management.
Yes.
Whitehaven Coal. Swimming in money.
Oh, ridiculous result.
Yeah.
The question is, right, look, Dave, I think I know what you're going to say. Technically, it's gone run too hard, too fast, $8, which is ridiculous, right? So possibly for me, a bit of profit taking. The result was good. I didn't see any gremlins in there. The only thing maybe, has it done enough for the brokers out there? Because, the brokers are pretty bullish with this sort of stuff. So has it done enough for them? For me, obviously I like the result and everything else. But I certainly would not be buying around these levels now post the result. I think it just needs to come back a bit.
Yeah, definitely, and it most probably will feel. Maybe it's had that sort of run there. Maybe it might come back down to 7 or 6. But if you're a long-term holder, you're obviously still holding. And I think there's share buyback as well. Did I read that?
I'm not sure.
After.
No,
they did a share buyback before in February.
All right, fair enough.
Okay.
Anyway, it looks like there's a bit of profit taking in there, and I suppose if you're a short-term trader, you probably do the same.
It says they haven't quite completed. So in H1 FY23, Whitehaven aims to complete the 10% buyback within the previously announced cap of 550 million.
I don't think anyone wants to do a buyback when their share price is at ridiculous prices.
No.
You're shooting yourself on the foot.
So arguably it's going to maybe give it plenty of support around that trend line, right?
Maybe, yeah, $6, yeah, somewhere there.
APX. Just slippery slope. Not interested. I think the announcement.
I think just with APX, it's like we're not going bust rally.
The announcement was pretty poor, wasn't it? Now Qantas. What are we going? What's happening on Qantas?
The CEO was actually on TV as well, so he was, talking about COVID, talking about staff shortages, and all those sort of things. Yeah, so he's saying the right things. Still, a big improvement, but still not great for Qantas. But you can see there's definitely pent up demand. So in a way, we're making fun of Flight Centre, but there is some truth to that, where it is becoming essential because people were stuck in their homes for like 3 years. They want to get out. So it's like, I don't care if it costs $10,000. I'm going to Europe, right? So look, I understand, but for me, I think I need to see more of Qantas, to be honest.
Yeah, definitely the chart, Wolf, it just looks sideways. Yeah. DTC getting sold off, down 5%. It's had that attempted recovery, like a lot of these sort of tech stocks, and it just can't go on with it, Wolf. It's really, really disappointing. So, if people are in this, hopefully they took a profit. At the moment, the price actually looks sideways to slightly down.
Yeah. I mean, look, they're saying DTC is to become cash flow positive in second half FY23. That's the right language to use. The problem is, Dave, it's a lightly traded stock. It's a really, micro stock. So there's not many investors out there looking at that sort of stuff. It doesn't take much to see a bit of profit taking on a result like this.
VEA, so had it on Einstein's, had a buy signal, I think pretty good, and starting to go through that buy signal. And is it going to maybe, it's a slow mover, this one, but maybe it can go up and retest that 290, 295 level.
Yep.
IGL, one of our dividend plays, solid announcement, Wolf, and just long may she reign. I mean,
yeah, great dividends. I think they're guiding also for another like 10% growth in 2023. I mean, it's almost like an ideal type scenario, right? All you're buying is for the dividends, and then you've got a cherry on top with 10% growth if they can manage it.
How good is that, really? And it's not overvalued. So
exactly,
great little story.
Trading on 9.4 times.
Yeah, definitely. This is one when we get a bit of a pullback in the market. This is one if you're not in it to try and buy, try and get it. But yeah, mentioned try and get it around 187. QUB.
Yep. Look, I always like this story. I have to say, I've got a soft spot for it because of the infrastructure, how important and how crucial and strategic it is in Australia, right? Let's hope it doesn't fall into the foreign hands. I won't mention any names, but I like it. I think they actually delivered a pretty good result today, and they're guiding for strong growth in FY23, which is decent. The only problem, Dave, they're still trading on 25 times, so it's not cheap. But you know, what does strong growth mean? That's my sort of question for them. Can they drop it below 20 times? Possibly, if they can do a 20% plus growth, that we can see it below 20, and then really it's going to be attractive. So one to watch, probably a bit early, but you know, if it gets over $3, I'd probably start looking to as a buy.
Wolf, Woolworths, WOW.
Yep.
Really bad price action so far this week. It's ugly as. What's going wrong there? You think Woolworths, Coles, come on, inflation, they can lift their margins, but they're getting hit from other points, other areas.
They are. This is the problem. This is a really weird, strange world we live in at the moment, Dave, where a lot of significant plays are at play. We've got inflation, then you've got recessions, then you've got interest rates going up. There's a lot of things going on, right? So for Woolies, inflationary period is usually okay or good. But then again, you've got all these COVID and absenteeism going on. So you've got wages rising, possibly, you know, you got to go pay more peeps. They might struggling with getting people to actually work for Woolies. So there's the issues that Woolies have to face. And you know what? Coles is doing a better job at it to manage all those issues. So for me, Woolworths was a much worse result than Coles. So I'm much more happier with being in Coles if I'm going to be playing this space, and probably better dividend as well to boot.
I like the way their EBIT was obviously slightly down, but they lift their dividend slightly.
yes, to appease the masses out there. Because imagine if the dividend went down, this probably would have been absolutely shellacked by 10%.
NEC, Wolf, this has had a massive sell down. It was actually trading quite nicely around this sort of $2.80 to $3 level. We've had this massive sell down. Classic little exhaustion pattern. Can it break it back? Can it get back over that 230, 240 level and come back to, what do you think?
Look, at the very least, on the fundamentals today, they deliver a very good result, right? And a good guidance out there. It should hold the $2 at the very least, right? Because it is cheap. I mean, it's trading at 9.7 times. That is undemanding, especially when you've got a growth in there as well and a good dividend. So the result was good. The outlook, which is obviously the key now for NEC, fairly similar to what SWN come up with, the 7 West, right? You know, I'm liking this. You know, do I have a preference for SWM or NEC? I think SWM for me, because they've got the number 1 position in the networks at the moment. But, you know, both of them you probably could do okay with. If you've got that, again, 12-month outlook, if the markets don't really shit themselves, Dave, I think maybe you've got.
Yeah, the trouble is this is a sort of stock that will go down a lot if the market does. Yeah, everyone will worry about advertising spend.
Yeah, that is 100%. You know, I can't argue with that.
It's not like Coles that might hold up or Woolies.
Yeah, that's true. That is true. So, you know, at the end of the day, the caveat is the market needs to behave themselves.
Right. Well, CHC Charter Hall.
Yep.
Yeah, it's not a huge dividend, but a very low PE at the moment. What's your take on this story?
Yeah, probably one of the better results out there, and probably the most solid ones out there. Charter Hall. So for me, okay, decent. I'm not a fan of this space right now, with what's going on in the background. However, you can make a case to have, if you're going to have a stock in your portfolio as a dividend play.
Yeah, I don't. This one. Yeah, I've only got a small div on this, Wolf.
What is the div you've got on this?
3%.
All right, let me have a look.
Which is surprisingly small. Normally these companies giving 6 or 7. So have I got the?
Yeah, no, you're close. I've got 4%. So it's probably not good enough then for a dividend stock. As if 4% is not good enough for you, then maybe you find some other real estate play in there that you might look. And there's so many of them out there. You can easily find something.
Yeah, can't even give a div. I mean, why? Yeah, very poor. S32, Wolf.
I remember we don't even get out of bed for less than 7%.
No, we don't.
S32.
Come on, S32. I'll try to go through these quickly. Not bad price action. We spoke about this in length this morning, going through the numbers.
Yes. Arguing whether this is a technical or fundamental.
Well, technically it's above water. It's not, but it's not a brilliant chart. My question to you is that you've suggested selling this when the resources and China started blowing off, and you could see them going. I mean, that situation hasn't changed.
No.
So fundamentally, it's got to still be a worry for you, this sector.
Yeah, no, it certainly is. And like I said, fundamentally, I would not be rushing into this. And I'm very surprised it's bounced back so nicely. But, I'm expecting a good result out of them. So maybe that's what's been driving the price. So if China slows down further, I expect this to maybe come back again. So for me, fundamentally, I would not be buying this. But, technically, is it a good enough chart for you?
And you haven't got the great dividend that BHP is giving you. So
but you do have a special dividend out of them. So you're still getting good return of it, but not like a BHP. Yes, I agree.
And I think the valuation is much more expensive than BHP. So great, obviously a great Australian story, but I just think no, not at the moment, not in this.
Fair enough.
Not in this world, Wolf. APE. Again, they've recovered really, really well, but this one looks like it's struggling to go on with it. It looks sideways technically. It's announced today. Fundamentally, it's down 2.25% as we're talking. How do you take that?
Yeah, it hasn't gone on with it with the actual fundamental results either, Dave. So possibly now might go sideways for a little while until we know more in the next 6 months. I think I prefer the ASG, even though it's smaller, less liquid. I think the ASG delivered much more interesting result than APE has.
ALO. Just having a look at that, Wolf. But it doesn't look too bad on the charts. It was a lovely move last week. That announcement good enough to take it a little bit higher?
Yeah, I think so. This is a very good announcement actually, and we talked about this. This is a little stock that's got hotel rooms, right? So short-term accommodation stays. And obviously they're doing quite well because people they can't go overseas because the tickets are too expensive. They just travel internally, and there's a huge pent-up demand for that. So can make a case that this could potentially still go quite well over the next 12 months. So then maybe there's a trade in this. So I think you're in it. You're still holding it, but I'd probably wait another week to see how the market sort of settles down with this.
Right. Okay. Zip.
Yep.
Do we really need to talk about it? I don't think
so. Why not? Let's finish. Let's finish on Zip and VNT. And and again, you see with APX, you see it with Zip. People are going, it's not going bust. There's a little bit of a light, maybe. So a little bit of a relief play. But again, I'd be selling the strength.
And VNT, tell us a little bit about VNT, Wolf. What does it do? Because it's only recently listed. It hasn't done too badly in a difficult market.
Actually, VNT has been around for a long time, though, in private hands, and it's been in and out of, I think, ASX Life and then private hands, ASX Life. So these guys are essential infrastructure service providers, and I think they've got a bit of Transfield in there as well, the old Transfield that used to be.
Oh yeah, I remember that.
Yep. So it's a contractor in a way, but a very good one. You know, so it's a big one. It's a good one. Saying that, you know, how do you, you know, for me, when it does become listed back on ASX, I normally want to give it at least 12 months, you know, especially when it's been, let's being sold by the trade partner and being listed. And, you know, they trying to list things way over the top, and then you see a bit of a fall down. So at this stage, at least it looks good on the charts, but let's give it a bit more time. Let's give it another, maybe, I don't know, 6 months.
Wolf, can we just talk about one stock very quickly, because it's Anson. I'm very thankful, actually. This is a stock that we were talking about the other day. I did say it looked very strong and definitely a hold. Oh, thank God I did call it a hold and not a sell. It is doing absolutely brilliantly today, up for 35%. And the announcement is they joined, Anson has joined forces with global DLE leader Sun Resin to develop a full-scale commercial lithium plant at Paradox Lithium project. Now, that's obviously, as you can see in the share price, very, very bullish for the company. They're trading currently at a 215 million market cap. Now, this move up today might put them somewhere near around 300 million. How do you see this?
Look, it's obviously a good positive move to have a MOU with a DLE technology provider. The question I've got is what is actually going to mean for them financially, right? That's always my question, and I don't think at this stage they maybe can answer that question for us. I think what I need to do is we need to wait for the PFS to come through, and I think that DFS, which is coming through. So once we get that, we can have a look at it and see where it stands. It is much more complicated than a normal lithium player, Dave. So for me, I would need to spend a bit of time on this, and it's unfortunate at the moment I just don't have the time. There's just so many reports going on. I might have to do it at a later stage.
And it's saying here that
hold on.
And Sun Resin has been working closely for the last 8 months on engineering design work for the DFS, and it's to be released in the near future. So not too far away, hopefully.
Exactly. So that'll be the interesting bit to see what they're going to come up with.
But congratulations there, Tim. Always a job for you as an analyst on Equity Story. Great stuff, champion, and good to see that having a fantastic move. On that note, Wolf, thank you very much. Always absolutely brilliant, and have a good day, champion.
All right, thanks, guys.
Go and do your
what?
hoovering, because your wife, she's in Europe. Go and hoover the house.
Yeah, please. I'm trying to get away from that bloody housework. Thanks.
All right, see you, mate. Bye.
Cheers, bye.
Bye.